Good afternoon, everyone. It's great to be here. I'm coming on after a fairly accomplished speaker. Let's see how I do, okay? Maybe he'll offer me a job. I know some of you really well. For those VectorVest customers that have come along to offer support, that's just wonderful. Thank you for making the effort. You've heard this little talk quite a few times before. My background is checkered. I've got, as the young man says, a degree in engineering. I've got an MSc in metallurgy. I've got a PhD in mathematics, all of which I assure you is totally and utterly useless in taking money out of markets regularly and consistently. Those of you, who's at university here? Anybody at university? Those things that they teach you at university, I use them every single day. There's not a day goes by that I don't use all of that stuff. Without a doubt, the thing that I've done in my life that's helped most with my trading is that in my youth I was an officer in the Royal Marines. And that's given me a level of confidence and discipline that I've used for a very, very long time. Some people say that you can still see it. What do you think?
You look pretty formidable.
I can still fit into the uniform, and it's closer to 40 than 30 years ago. The reason that I'm here is that about a long time ago, 35 years ago, I was playing really, really good rugby in London. I accepted a position to play rugby sort of semi-professionally in Transvaal in Johannesburg. So I went off to Johannesburg to play rugby. Played at the opening of Ellis Park. And while I was in South Africa, I was billeted into an office with an old fella, long since dead, from Cornwall. And he was, in fact, trading the stock market every day. He was trading the stock market technically. He'd started life as a draftsman, but he'd ended up as a metallurgist like myself. And every single day, he would hand chart the top 50 shares in Johannesburg that he was following. His charts were an absolute work of art. And I've still got one of his charts on my office wall, a chart of S.A.B. Miller. I watched what the old fellow was doing, and I saved up some cash. And in October 1982, I put on my first trade, and it was a winner. And they say that if your dad takes you fishing and you catch a fish the first morning, will you fish for the rest of your days? That's what happened to me. I put on my first trade in October 1982. Between October 1982 and 1988, I saved up my loot carefully. Like the hound of Hounslow, I lived on Mars bars. What is that fellow doing? I would like to know. Okay. I lived frugally, and I put together a sum of money. It was a fairly small sum of money by today's standards, but I felt it was enough to cut the corporate umbilical cord for good, and I've been trading on my own ever since. For the first 10 years of that, I traded on my own. Mostly in gold stocks. Gold stocks, there was no leverage in those days. You bought the share, and gold stocks would go up a fair clip, and they would fall a fair clip, and there was good money to be made in the ranges. And I paid off my first house in a South African gold stock called Randfontein Estates. It was listed in Johannesburg, London, and New York City. Great little trading stock. It's now called Harmony. One night in a mining town, has anybody ever owned any platinum shares here? No? So a lot of wise people here. Well, if you'd owned some platinum shares, they would have come from a small town in South Africa called Rustenburg. One night in Rustenburg, the speaker at an investment meeting got laryngitis. And they asked me to talk. It was a talk organized by a stockbroking company called Ferguson Brothers that you haven't heard of, but you've heard of what Ferguson Brothers have morphed into. They're now called Investec. The talk went well. I was scared stiff. I've told Simon this many times. I told my mother, who was alive at the time, that I did a talk on the stock market and people loved it. And she said, well, David, if you remember, we wanted you to be a Presbyterian minister. And at one stage I was enrolled, sir, at the Church of Investec asked me to come and mentor their traders, which I've done and I've been doing for the last 15 to 20 years. I have a big program of work this year with Forex traders at Barclays and Standard Chartered all around the world. And at this stage of the game, I actually only teach Forex trading to institutions. I don't teach it to retail traders anymore. Why, you say? Why do you think I don't teach it to traders, retail traders anymore? It's just too bloody difficult, sir. Yeah. It's just too bloody difficult. That's all. So I don't need somebody's putting 50 grand into the market and losing it in a fortnight. I just don't need that on my conscience. I did a seminar some years back for London-listed Old Mutual, and at the seminar, there was a fellow in the back called Tom Hogarth that many of you will have tripped across, and I tried to retire at 54, and I went to have a nice place in Cape Town overlooking the sea, and I tried to retire, but I got bored. And Tom came from London to Cape Town, dragged me back to London to start up a little company called Which Way Today, which I'm still a shareholder in, but I don't do anything anymore because I'm working with VectorVest. Simon, our man here at the front in the pinstripe, was the CEO of VectorVest. Some of you will know him from Round the Clock Trader. Simon has got a vision to be Scotland's answer to Rupert Murdoch. So he decided that he wanted to focus on his media business. I had been running VectorVest in South Africa, and VectorVest asked me to run it in the UK, and I've been doing that for the last couple of years now. It's helped me tremendously with the discipline of my trading, but to give you an idea, who's new to stock investing? Who hasn't put a trade on ever? Me. Okay, there's a few of us. There are a few of us. Well, I have two boys. I adopted them along the way. They're not my own. Mark Twain says so beautifully that there's only two important days in your life, sir. One, the day you were born, and two, the day you work out why you were born. And I am quite sure that the reason I was born was for those two boys. Okay, and I'm sure many of you will think the same about your kids. So the eldest boy is a rugby coach in Pretoria. The second boy, I struggled to get out of bed at 1 o'clock. Does anybody get children like that? I try to hoof them out of bed at 1 o'clock. I got him interested in VectorVest, and he got into the program. He got interested in stock trading. He built a track record. And in 2 years, I took him from knowing nothing about the stock market to being a portfolio manager at a large Johannesburg fund managing millions. And by ticking the boxes on VectorVest, he's outperforming traders that have been trading for 30 years. In 2 years. So those of you that are new to this, you can get really, really good at it. And on many occasions, those of you that are new, that don't have a bad swing, will do much better than the old folks that have been at this for a very long time. With a bad swing and lots of bad habits and big egos. I can't be wrong. This is the way. So take heart in that. Simon, the next slide, please. You've been waiting all day for this. Okay, clearly all day for this. We are fully authorized by the FCA. Simon is our compliance officer, and we're probably pretty much the only company here that is. I can't give one-on-one financial advice because I haven't done a fact find. I need to sit down. I have no idea whether you're a multi-millionaire or whether you're flat broke, busted flat in Baton Rouge and heading for the train, as somebody once said. We have no idea, okay? Before I can give one-on-one financial advice, I would have to sit down with everybody and go through a thick fact find. So that said, we can move on. Thanks, Simon. Next one, please. What's VectorVest and what's so special about VectorVest? Well, VectorVest is like the chair that's keeping you off the floor. There's 4 legs on it. The first leg is to do with value. And every evening, VectorVest puts a value to every share on the London stock market. Now, at our stand, we have a little green book, and in the green book, written by Dr. Bart DeLito, who put this product together 26 years ago, he fully reveals the algorithm that's used to value the stock. When I started with VectorVest, I checked our valuations against institutional valuations, and rarely are our valuations more than 10% away from the institutional valuation. So our valuations are robust. We put a value to every stock every evening. Now, when I was a youngster, my old granddad gave me a sort of one-on-one MBA. And he used to say so beautifully that the only way to make money in anything is to find the value of something and then pay less for it. Now, if you're in the used car business, that's exactly what you do. Okay, you see the Merc coming. You're a very unlikely looking used car dealer, sir. You see the Merc rolling onto your forecourt. You get out that little, you know the book they've got? They keep it down here. And you look and you say, well, the Merc is worth 25 grand. But the dude's desperate and you offer him 17 for it and he takes it. And you can make a turn in the middle. Now, many years after my grandfather told me that, I read Benjamin Graham's book, The Intelligent Investor. So, a show of hands, who's read Benjamin Graham's book? It's 20 quid. Warren Buffett says it's the best book that he's ever read on the stock market. Maybe it'd be worth your while to have a little flick through it. There is about 10 chapters in the book. The first 8, he talks about how to value a stock. And then the last 2, he says, wait for Mr. Market to do something dumb so you can get it cheap. So largely what he was saying was what my granddad was saying so many years ago. The only thing that I can pretty much guarantee today is that my granddad had not read any of Benjamin Graham, because his parting shot as I went off to university was, education shines a stone and tarnishes a diamond. That was his last words to me before I went to university. So we look at value. The second leg is we look at earnings potential over the next 3 years. We look at earnings safety. And we look at the direction of the share itself. So Simon, the next slide, this summarizes it. What we want to try and do is that we want to try and find what's the share really worth. Back at 1, Simon. How safe is the earnings stream? Are we talking about the Prudential here? Or are we talking about Randgold Resources? Prudential, nice, safe money coming in. Randgold Resources pulling gold out of the ground in some ghastly place in West Africa. I mean ghastly. I've been there. How safe is the earnings stream? And some idea about the trend. And that's, in this short presentation, that's what I want to try and answer. Simon, next one. There are lots and lots of things that affect value: earnings, inflation, and interest rates. And next one. Every day, as I've said earlier, we put a value to every share in the stock market. And as a default, we favor undervalued shares. And when we get to the program, I'll show you in a second. Buffett says it so much better than I when he says that you don't know who's been swimming naked until the tide goes out. So we favor undervalued shares. The only way to make money in anything, from used cars to property to stocks, is to find the value of something and pay less for it. Everybody happy with that concept? The most important number on VectorVest is relative value. So we work out the value of every share, and that's the value of the share today. Relative value is our best shot at the earnings potential over the next 3 years. It projects the future. Now, the future, again, to quote Mark Twain, is a very slippery commodity. Here's how we do it. We project the earnings of every company on the LSE for the next 3 years. We do that by extrapolating the past and incorporating an earnings flow estimate that we source from Thomson Reuters. we assume that those earnings will be fully discounted into the price at some time over the next 3 years, not when. They will be discounted into the price as a function of sentiment. And sentiment is really, really difficult to predict. In fact, the father of sentiment is a fellow called Ralph Elliott, who's done battle against the Elliott wave principle here. Anybody? I probably invested 20 years of my life studying the Elliott wave principle. Sometimes I think it was a complete blind alley. So Elliott says himself that the market normally does what I think it's going to do, but never when. So sentiment is really difficult to predict. So in relative value, we work out the earnings of the share over the next 3 years. We assume that those earnings will be fully discounted into the price. At some time over the next 3 years, we work out what the price will be. We take the projected price and we subtract the price today to calculate the upside. And we divide that upside by what a AAA rated corporate bond will pay over the next 3 years. Now, the AAA rated corporate bond is our measure of the risk-free rate in a ghastly thing called the capital asset pricing model that, again, many of you will done battle with. I think it's the most important number on VectorVest. Everything on VectorVest is run between 0 and 2. If you've got a share with a relative value of 1.4, that's saying that we believe this share has a high probability of outperforming the risk-free rate by 40% at some time over the next 3 years. Anything above 1.3, VectorVest rate is excellent. Don't give me a heart attack, Simon. Okay. I find the trading quite easy compared to the IT. And Windows 8 has completely left me. 8.1 has completely killed me. Now, I'm rated to manage money in South Africa. I'm not rated to manage money in the UK as yet, but I'm working on the exams presently. And it is my vision to start my own little fund over the next year or two. Why I would want to do that at 60, I have no idea. But what else would I do all day? I would not dream of putting any of my high net worth individuals that I manage money for into a share that's got a relative value of less than 1.3. And at the moment, because there's so many, I've actually pushed up the relative value requirements to 1.4. It drives the share price. Really cool number. It's the most important number on VectorVest. The next slide, Simon. The next number, folks, is relative safety. As the slide says, it's an indicator of risk. It measures the consistency and the predictability of the financial performance. So what the computer does is that over the last 5 years, it looks at the balance sheet, the income statement, the cash flow statement, margins, and it works out, are these numbers getting better? Or are these numbers getting worse? The numbers are mathematically massaged between 0 and 2. Above 1, good. The further above 1, the better. If you've got a company with a relative safety above 1.3 and higher, you've got a company that's making lots and lots of money, and those ratios are getting better. Okay? Now, I have been told that I'm too conservative in the past, that I've looked for companies and missed a lot of opportunity because I pushed the relative safety up too high. But can you think of any reasons why you wouldn't have put your hard-earned after-tax money into a company that's making lots and lots and lots and lots of money safely? Now, to go back to my son, Mike. Mike sits in front of 6 screens all day. He is looking for shares that are undervalued. He's looking for a share with a really high relative value, but he's not worried about the relative safety because he's sitting in front of those screens and he's managing risk proactively every single day. Because those shares can quite easily double. But they need to be watched. There's absolutely no way that I would put your money into that share, sir, because you're a nice lad. But if I lost money on you, let's say you give me 100 grand and I lose 25 grand. you're a nice guy. You're not going to give me a hard time, but you're going to look at me funny. And you're going to say, hey, dude, I could have lost money on my own. I didn't need to pay you to lose money, okay? So I would not put your money into a company with a low relative safety because I just don't need that hassle in my life. But my son is managing money for youngsters his own age, and they all want to get rich quick. So he's looking for nice big movements, and he's happy to sit there. And I'm happy to report that he's out of bed these days at 6 o'clock to get to the office for the call, for the conference call. So it's completely changed his life. And he's making big money, and he's just about to buy his first convertible. Okay, I don't want to do that anymore. This summer, my brother and I are riding our Harleys up the west coast of Norway, and the last thing I want to be doing is to be looking at bloody shares when I'm cruising up the west coast of Norway, okay? So I don't want any surprises, and if you're managing money for somebody, the last thing you want surprises, okay? You make 50% one year, you lose 10% the next year. The year you lose the 10%, you've got to hold the phone out here somewhere, and the plastic's melting in your hand. So you don't want that sort of thing as a money manager. So relative safety, folks, you need to doctor as to where you want to be and your own stomach for risk. Who would call themselves conservative investors here? Well, then you'll want to push your relative safety relatively high. Okay, so you need to think about that. VectorVest is a massive toolbox, and it's not a black box. You need to think about what you want and tailor that to your own. We've certainly got dozens and dozens of canned searches that you can use, but nevertheless, there's a great deal of tailoring that you need to think about to find shares that suit you. Next one, Simon. Relative timing measures the trend. That's probably the easiest of the numbers. Again, it's mathematically massaged between 0 and 2. Above 1, the darn thing's going up. The further above 1, the faster it's going up. So we've got a few Kevins here, a few conventional analysts. It's probably closest to the MACD in its derivation. It measures both the trend and the momentum of the trend all rolled into one. For those of you that are new to this, MACD was designed by a very good friend of mine called Jerry Appel. It's called moving average converging diverging. And there is an axiom of investment education in that the more complicated it sounds, the more you can sell it for. And Jerry Appel felt that moving average converging diverging was suitably complicated, and as a result he sold 50,000 copies of his book at $48 each in 1978, which is a fair amount of loose change. And then what Bart DeLito did is that he put them together. Thank you, Simon. And I couldn't believe this when I first saw it, because what he did was that he put relative value and relative safety, which are fundamental measures of the share. He put that together with relative timing, which is a technical measure of the share. And for the first time in my 30-plus years of experience, I now saw a number which, in fact, looked at both fundamentals and technicals in the one number. Now, if you've ever been to an investment meeting, you'll know that the technical analysts sit in one corner, and the fundamental analysts sit in another corner, and they don't speak. The fundamental analyst thinks that the technical analyst is reading the tea leaves, and the technical analyst thinks that the fundamental analyst is reacting to numbers that, by definition, are 6 months old. They don't speak until the second drink, and then they throw abuse at each other for the rest of the evening. Okay. Now, here was this guy, Bart DeLito's got a PhD in chemical engineering, and he pragmatically said, I just want to make some money, and he put fundamental analysis and technical analysis together into the master indicator, VST, and as a default, all of the shares on VectorVest UK are graded by descending VST. And that's where the winners are, which I'll try and show you in a few minutes. Next slide, Simon. Folks, there is risk and reward, and if there wasn't risk, there'd be no reward, and God help us, we'd all have to get jobs. Okay? So if there was no risk, there'd be no reward. So we calculate a stop loss for every share every evening, which is a line in the sand where you need to think that, you know, this is not going my way. At least you need to re-examine why you got into the darn thing in the first place. It's quite a clever stop loss. It's based around a 13-week moving average, but it's adjusted for two things. It's adjusted for the volatility of the share, and technical analysts will be familiar with a concept called average true range. Okay, and it's also adjusted for the fundamentals. If the fundamentals are good, we widen the stop loss. We give the share plenty of room to move. If the fundamentals are drawing in other words, the relative value is coming down towards 1, the relative safety is coming down towards 1, we tighten the stop loss up. Our objective, ladies and gentlemen, is to find a share that's undervalued, that's aggressively growing its earnings, relative value, safely, relative safety, that's going up, and largely we want to get the hell out of the way and just let it go up. Who's read Reminiscences of a Stock Operator here? It's a cracking read, folks. And if you haven't read it, then I would, and you want to start to trade or get involved in markets, I would recommend it. It's about a guy called Larry Livingstone, who, in fact, was based on the real-life exploits of Jesse Livermore, written by a guy called Edwin Lefebvre. And it was a chauvinistic age, ladies, so you'll have to bear. It was written in the 1930s. And he says, Livermore says so beautifully in the book, he says that those men that can be right and sit are uncommon. What a line. Those men that can be right and sit are uncommon. And then in the next chapter he says the following, the money's made by the sitting, not by the thinking. What a line. The VectorVest stop loss is doing its best, folks, to put the stop loss at a place where you won't get easily kicked out by the noise, but at the same time protect your capital. That's what it's trying to do. Now, every now and then you get spikes, and the market stop losses are hell. There's no doubt about that. They'll do their best to kick you out. For example, look at that spike down in JD Sports. Did you see that? Went right down. Imperial Tobacco did the same thing. In my blog last weekend, I wrote, what have Imperial Tobacco and JD Sports got in common? That was the title of my edition last weekend. They both, in fact, had exactly the same technical fade before they went up. Markets do that all the time, and stop losses are difficult. The VectorVest stop loss does its best to allow you to ride winning trades. Does its best. Every now and then the market will spike and you'll swear and kick the dog because you get out and it goes up another 25%. That's happened to everybody here. Am I correct? Not just me, okay? Stop loss is a really cool stop loss, but stop losses can be troublesome. So I'm in the next one. Folks, every day we put a buy, sell, or a hold recommendation to every share in the market. Now, it is a buy recommendation. It doesn't mean go out tomorrow and buy the blessed thing. We have probably got, I think there's 500 buy recommendations in the London stock market. So it's a buy recommendation, and the reason we calculate it and give it out is that a big part of the VectorVest market timing system is all about market breadth. And every day, we calculate the number of shares that are rising divided by the number of shares that are falling to work out the breadth of the advance. So let's summarize. At VectorVest, in its vanilla state, the way I use it, I'm looking for shares that are undervalued. I'm looking for shares that have got high earnings potential, that are growing their earnings aggressively and safely, that are going up, and I want to buy them into a general market that's going up. And a big part of the VectorVest market timing system is the breadth of the market itself. And I'm going to talk about the market timing system if I've got a moment in a second. So Simon, next page, please. Okay, now I need to go to the product itself.
You want to sit there and do that?
I think so, Simon. I think so. Now, this is where Windows, what's its name, gives me a hard time. Because if I go into that now, out of that now, it stuffs me around terribly. So I need to go Function, do this, duplicate the screen. I took this to Microsoft to try and tell me how I wouldn't have to do it, and they told me upgrade to Windows 10. That was their suggestion. I'm now going to go to Viewers. Now, the front page of VectorVest, folks, is all about the general market. And there's 569 shares on a buy recommendation, and there's 280 falling on a sell recommendation. That's there, folks, to measure the breadth of the advance. That's what it's for. Okay, the little traffic light at the top, in fact, measures the primary wave of the market, which is the short-term trend of the marketplace. I'll talk about the long-term trend or the underlying trend momentarily. So the front page of VectorVest is a summary. So when you look at that for the first time, you can get a little bit gobsmacked, if you'll pardon the expression, because there's so much information there. But it's done like that so that when you get used to that information, you can see pretty much everything on the one page, and it's all on your smartphone these days. There's an app, and it's frequently, I have sorted out my portfolio before I get out of bed in the morning. I have a wee quick look at it while I'm still in bed. At 60, there's not much else to do, okay? Let's go to some shares. We'll come to market timing in a second. Let me look at some shares. And this is today's date, I hope. Those are our top shares by VST. And that is the default sort. Now, there is no income in this whatsoever at the moment. So who needs some income? Who wants some income? Anybody? Yeah. Okay. All right. So you would have to write a search in Unisearch that would stipulate, let's say, a 3% dividend yield, safe dividend yield, that's growing at maybe, say, 8% a year. So you would have to add a search and tailor those parameters for you. At the moment, although many of those shares do pay a dividend, we haven't asked for a dividend specifically. Certainly, the second one, I've just taken a really fat. Did anybody get a part of that Persimmons dividend? A real cracking dividend, wasn't it, sir? Yeah, lovely. Was that beauty? Yeah. Okay, and there's many more of those coming. For example, Berkeley, or Barclay, whatever they're called, have pretty much said they're going to pay an 8% yield for the next 3 years, and the cash is already there. Okay, Redrow's at the top. Now, Redrow is trading at 379. We believe it's worth 636. Are you falling asleep on my talk, sir?
It's late in the day. I'm still listening, though.
Are you sure?
Absolutely.
Okay.
Redrow.
I'll send you to the back and write lines. Okay. Pulling your leg. Only throw abuse at people who can take it. All right. So we believe it's worth 636. The relative value is 1.61. That means that over the next 3 years, we believe that this share will outperform the risk-free rate by 61%. Now, we could have got it wrong by a bit, but not that much. That looks really cool. The relative safety is 1.33. The relative trend is 1.63, and when we square those, we just sum of the squares, work out VST at 1.53. That's the top, and it's on a buy recommendation with a stop loss at 342. This is just the percentage change yesterday. That's the percentage. That's what you can get from the newspaper. So what VectorVest does, folks, is that it takes the fundamentals, and we buy those fundamentals from Thomson Reuters. We buy them, and we buy the technical data from Thomson Reuters. The technical data is cheap. You can get it anywhere. But the fundamental data is expensive, and it's taken into the program, and every evening the program grunches those up and gives us 3 numbers: the value today, the earnings potential, relative value over the next 3 years, and the earnings safety. It gives us 3 numbers that we can react to. Let's go down to the bottom to a share that we probably know. It's been a great performer over the years. Just Eat, Shire's there, the Man Group, Galliford Try, Savills. Let's go a little bit further. This has changed my resolution a little bit on this thing. Greggs. How many people here have had a ghastly sausage roll from Greggs? The grease dripping through your fingers as you eat it. Oh, I'm 60, you got to be careful. The share is flowing up the page. They've changed their strategy. I'm sure you've all read about it. It's been a great performer over the years. However, Greggs is trading at £10.95. We believe it's worth £9.72. So it's had a great run, but it would be foolish, I believe, to buy into it tomorrow because it looks as if it's actually shot its bolt for the time being. Redrow, looks as if there's an awful lot of upside there. Just Eat, trading at $4.87. We believe it's worth £4. It's also had a good run. However, the relative value of Just Eat is 1.49. I think that I wouldn't want to buy into it now when it's trading above our value, but the potential over the next 3 years looks wonderful there. So if you've got it, you should hold tight to it. Okay, the relative value on Greggs is 1.14. Okay, and that's not great. So the style of investing, folks, I have defined the style of investing as value momentum investing. We're looking for value, but we want the bus to be going our way, which is quite, had anybody heard that expression before? I actually made it up 2 Christmases ago in a London Pride-inspired moment of creativity, okay? I'd never heard the expression before. We've got a few professionals here, market professionals. Kevin, have you heard that expression before, value momentum investing?
Only when you said it.
Okay. I made it up, mate. I made it up. It's a cool way of investing, and my own philosophy these days is value momentum investing. Sometimes I'm looking for a little bit of income as well, but mostly value. I'm looking for shares that are undervalued, that are aggressively growing their earning safety. Now, many people laughed at the title of this presentation because they said, how can you make money aggressively and safely at the same time? Well, I assure you that there are many shares in the London stock market where you can make money aggressively and safely at the same time, and VectorVest finds them. The other thing about the program is that it gives you a great deal of discipline to stick to the winners. How many people here have bought a share at 3p because you felt the darn thing was going to go to 30 quid overnight? Okay, and the thing lavishes down there at a halfpenny now, okay? So it gives a great deal of discipline, especially, I don't want to speak too loudly about mining companies, but in Johannesburg they say the following: hey, never wreck a good mining project by digging a hole in the ground. Okay, so most of the money's made by the dudes who put the thing together long before it comes anywhere near a market. I'm running out of time, folks, but I just want to illustrate this. I'm now going to go back to the start of the year. And at the start of the year, the general market moved up. And we get a green light on here, which I haven't got time to explain now. I'll show you it in a second. But the general market, the underlying trend, took up on the 31st of January. There's no doubt that last year was a bugger of a year. It really was. Last year was difficult. 2010, we were making 40%. 2010, 2011, pretty much the same, 2012 and 13, even better, and last year we were flat, and towards the end of the year, I made most of my returns 16% in the last 2 months. So last year was difficult. The FTSE, as you know, last year was in fact head-butting. That's the only word I can think of. It was head-butting that 7,000 level. Option players had a field day writing options around that. But directional traders like yours truly struggled last year. I haven't changed my plan at all because it's so tempting to be fighting the last war. You change your plan based on what happened last year. I've absolutely no doubt that the Royal Air Force is still planning on fighting another Battle of Britain. I asked old Paul about that. I've no doubt that that's the case. Fighting the last war. Those of you that are traders will know the temptation to change your trading plan to what worked yesterday. Okay, so I'm not changing my plan at all. My plan has worked really, really well. Last year wasn't a particularly good year. The market didn't, in fact, and to quote my dear grandfather again, he said so beautifully that you can't take a quart out of a pint bottle. Last year, the general market was flat. Very difficult to make good money when the general market is flat. And as I discussed with this gentleman with a nice striped jacket this morning, sentiment is everything, that's for sure. There's the start of the year, folks. JD Sports at the top, you little beauty. I had to sit and wait on it. The fade last week was magnificent. I love to see a market coming down. There was a fella called Richard Wyckoff had a beautiful trading setup called a spring and a thrust, where the market would fly down and then reverse. I wrote about it last week on my blog, vectorvest.co.uk/welcome. And I wrote about it last week in my little blog. I'm going to quick test the top 8. And this does a simple linear test between the start of the year and, folks, the top shares by VST. First of all, the top 8, we haven't got a loser. And the market's up 7.36%, and our top 8 is up 18.68%. And that happened while you were sitting on your backside doing nothing. No trading whatsoever. The reason that happened, folks, the general market was rising. Our objective is to find shares that have got high VSTs, and we want to be in the market when the general market is rising. Now, I'm not allowed to guarantee anything, but I will guarantee that your money is much, much safer in 8 high VST shares when the general market is rising than it is in cash. Because sooner or later, inflation's going to nail it. Okay? So that's the part. Now, there are dozens and dozens of searches. And that's just the default search. It's not a bad place to start. But in Unisearch, there are hundreds of searches. Aggressive, bottom fishing. Oh, not for me. Not for me. I've never seen a share too low not to go lower, so somebody else can do the bottom fishing. Not a part of my value momentum stuff at all. Candlestick searches, conservative searches, there's some great searches in there. There's David's pension, pale blue chips, and my own version of the pale blue chips. Some great searches in there. If we go down a little bit further to prudent, there's my search, David's big hitters. Oh, it's a beauty. Very simple. It's looking for a share that's got a relative value above 1.4, a relative safety above 1.2, and the stock's value must be at least 5% above the price. Simple. If I run that particular search today, there's my watch list. Redrow, Persimmons, Bellway, Barrett, JD Sports, and that's it generates a watch list for me automatically. Now, at the moment, I'm going through a little exercise because I've been living, I started to trade long term, but I've been living in South Africa for a long time. I have a flat in Camden Town, but half between me and my brother, and he's just got married. So now I'm forced into the London property market. So I'm now spread betting my way to another flat. So I'm going back to spread betting again. But in fact, the shares that I use for spread betting are these shares. And then I look for really good technical setups. I'll show you my technical setup in JD Sports. If I click here, all the charting that you'd ever want, assuming the internet is working, is here. But I haven't highlighted the charting today because the charting you can get anywhere. VectorVest puts the best of both worlds together. Fundamental analysis, technical analysis, and there's the RT, but there was the fade in JD Sports. And folks, when it took that level out, there's the fade. When I see it coming down like that in a share with really good fundamentals, and I put on a horizontal line, it took out that low, and then it went back to that high, but took that low out. Now, on the floor of the Chicago Mercantile Exchange, the bar that goes down below that low is called the poke bar. And as soon as you see the market coming up and taking out the high of the poke bar, it's away. And that's what Richard Wyckoff called a spring and a thrust. And that's the basis of most of my spread betting, as simple as that. I like to see a share that's got outstanding fundamentals. I like to see the underlying trend of the market going up, and I like to see a market going down, stopping out everybody, and then reversing. Just remember, folks, that the market does not like people getting rich that shouldn't be getting rich. It likes to funnel the loot to those people who really deserve it. Okay? And so you just got to say to yourself, am I one of those people who really deserve it? Okay? You got to be feeling good at this business. If you're not feeling good, you're dead. So your self-esteem's got to be high. If you're feeling miserable with yourself, don't even switch the computer on that morning. Those of you that are day traders, that's even much, much more important. Who are the day traders here? Anybody? Well, you got to be feeling good, dude. You got to be feeling good. Okay? So that was my particular setup. And they're running away on me. Big girls, no girls leave, please. If the men leave, I can take it, but if the girls leave, that hits me in the heart. The last thing I'm going to stop with is our market timing graph. Now, this is the London market itself, and it's the VectorVest composite of the London market. I'll put up 6 months, maybe a bit more. There's the October sell-off. Now, this is a chart of the VectorVest composite, which is all 2,200 shares that we're following. It's an equally weighted index. We have many market timing methods, but the longest term method is called a confirmed call. And it automatically places these red and green dots on the chart. There was a green dot which says that the market is rising. That was a red triangle that said the market is falling. And the last signal we had was here. And that happened, as I say, on the first week of January. And since the first week of January, this market has been rising. The underlying trend is up. So when you see a green dot, you want to be invested in the London stock market with a search that suits you. I use the big hitters search. And to do your best to try and sit. Now, when you see a red triangle, the market is starting to fall. Now, if you're small, just get out. Cheer up, lad. Are you all right there? Good God, you look as if the worries of the world are on your back there, son. Are you all right? Get this man a glass of water, please. If you get a red 1, run. If you're small, run for cover. If you're larger, then it's difficult. There could be tax consequences and all sorts of things. Then watch your stop losses carefully. If you see one of these. The high VST shares hold up really well, but if we're in a 2008, nothing will hold up. So you're not sure, when you see a red signal, is this a nice benign pullback or is this another 2008? You just don't know. So you have to be careful. The third thing to do when you see a red triangle is to, what I call, weed the garden. Have a look at the shares you've got, and maybe some of the fundamentals have changed since you bought them. So you want to weed the garden, raise some cash for the next buying opportunity. And the fourth thing is the most fun. You put on a Bob Marley CD and you just hum, don't worry about a thing, every little thing's going to be all right. Okay? I wouldn't have got through my divorce without Bob Marley. I hummed that all day, every day. No, it's not. No, it's not. New woman, there's a long story behind that, okay? So, since this particular day, market's rising now. It came back to that old top, made a treble bottom here. That's always a good sign. It came back, and apart from the shouting, hit that top, and it's now breaking up here, and it's going, that's for sure. So I'm fully invested, and I've been fully invested since the second week of January. And that's the process, folks. I want to try and find undervalued shares that are aggressively growing their earnings safely, that are going up, and I want to buy them when the general market is going up, and VectorVest does all the heavy lifting of that. Normally the VectorVest, there's no contracts at VectorVest, folks. If we can't make you money, then you simply stop it. No contracts, no buying, no £2,000 weekend seminars. It's normally £5.95 for a 5-week trial. Today I'm offering a 60-day trial for £5.95. Anybody that's interested in a 60-day trial, at the end of the 60 days, if you like it, it's going to be £39 a month. It's on a month-to-month basis, so if it's not for you, then you simply say it's not for you. And we shall remain friends. Folks, take care of yourselves. Thanks for coming along. It's been great. Thank you.